Welcome back to the channel. I hope you're having a fantastic day wherever you are around this beautiful planet of ours, and you are trying to keep yourself busy during this extremely boring bear market. But I've got a big video for you guys today. We are looking at the bottoming process on the S&P and the economic cycle. I know it's a very unpopular opinion with the masses, but generally at the turns, it tends to be an unpopular opinion with the masses. They're very focused on different things like news headlines telling us things are going to get a lot worse. But we've heard this all before, and the market continues to climb. We will get to a point where we have some severe corrections ahead, but we're not there yet. And I want to show you that in the charts and the data today. But first, like and subscribe, of course. But let's go for a heads or tails spin. Heads or tails comment section. Write your comment after that, heads or tails, and then a comment, and whoever's right answer is chosen at random will get read out on the next video. What an absolutely magnificent prize for your heads or tails guesses. Comment section down below, guys, and of course, subscribe and like. All right, let's throw a little bit more fun into this bear market because the market is really not going anywhere, but it is winding up for something in terms of Bitcoin. Today, S&P and the comparisons here with the Dixie and the peak of the cycle. I want to share this with you. Something big is brewing. Don't go anywhere. We're looking at macro stuff here, and we'll update Bitcoin and the cryptocurrency markets because these are probably going to take a little bit longer, as we have been suspecting throughout 2022 after the breakdown, of course, the bear market. All right, so we just need a little bit of background here. In case you were new to the channel, thank you very much. We follow the 18.6-year economic cycle, basically the property cycle, the land cycle. Try not to get too confused with apartments and houses and rural and commercial. We're broadly speaking here, property, land, and this is essentially the business cycle, the economic cycle. Now, it might vary a lot from what has been read and taught in economy textbooks in university. They tend to get it wrong quite often. This has been proven over the last 200 years in the US, and approximately 300 years of data has gone into this through the UK as well. All right, so that's what we're basing this on right now. And from what I've seen over the last 16 years, it has worked out very, very well for my own investing and those who use this as well. So let's just take a quick look here. This is what we're going to be basing things on for today, to have a look at the peak of the cycle and how the US dollar comes into play with this to give us some signals earlier on for the second half of the cycle. And right now we are coming out of the mid-cycle slowdown and we're moving into this second half, so this sort of second 7-year period. This might be a lot to take in. I do understand, and if it's something that is completely new or you don't believe it and haven't seen it yet, I hear you. I've been looking at this for quite some time, and it did take a little while to get a hang of it, but here we are. It's worked out very, very well for the mid-cycle, which happened around 2020, okay? And that's what we're coming out of now. 1972, 1989, 2007, the approximate tops. We have two different things here, obviously stock market and the land market and the economic business cycle, which work more closely together, okay? So just because the stock market peaked at 2007 doesn't mean the economic cycle or the land cycle has to peak at that exact time as well. We'll see here the land economic cycle was around the late 80s, early 90s. That was for the land cycle. We had that bottoming process into 1993, so approximately a 4-year down. Whereas the stock market in 1987, as we'll see, peaked in 1987, very quick, severe crash. The Black Friday happened in October, 50% down, and then the market started to recover from that point. But we're talking macro here. These are big cycles coming together, and you're forecasting approximately 20 years in advance. If you've got the power to do this, a year or two, and you're out from a year or two, but you've forecasted 20 years earlier, you can change how you are setting up towards the end of that peak. You don't have to stick to that date if you see things changing. And that's what we're looking forward now going into approximately 2026. If things start to happen a little bit sooner, maybe 2025, we'll see that. If it happens a little bit later, 2027, we'll have that data as well. Remember, these are big macro cycles. And what we're looking at here are the peaks in the stock market, which are closely correlated to the peaks in the 18.6-year economic property cycle. And then overlaying that with where the US dollar comes in at approximately those peaks. All right, so this is data over the last 50 years here. You can see we go back to the 70s. And we're just looking at the peaks now according to the economic cycle. So what we're seeing here in the stock market, we had that peak around 1973. So there was a peak and then a lower top. So I can just zoom in on that a little closer. You can see we had a peak right here and then a lower top and then the collapse. Now it doesn't look big compared to now, but if that was all we were seeing at the time, that's quite a significant drop here from about 120 down to 60. So it's a 50% decline in the stock market for that period. So that was the first peak. Peak one there, 1973. Now the drop in the stock market in 1987 was about 36%. So that's the second peak as well. So just note when these peaks are coming in. This was approximately September and we had that big drop into October. All right, going forward into 2007, peak is October and we dropped into March of 2009. We had that other first major low around November of 2008 and then that final low in March 2009. So there was a period between those lows as well. That's important because I think we'll get something like that moving forward. We saw it in the mid-cycle here, the 20-year cycle going 20 years back, October low, and then the March higher low into 2003. So 2002 into 2003, we've got an October low, 2022. Maybe we get another sort of similar bottoming pattern where we get that higher low into the first quarter of the following year, in this case being 2023. So I'm always looking out for that the bottoms can take some time, roughly sort of 6 months. In this case, you had a lower low. In this case, it was a higher low. Nonetheless, it was still around the bottom and it was confirmed to be a bottoming pattern. But in the news, it is crazy, absolutely extreme, severe panics everywhere during that period. Then the market takes off from that point. So where we currently sit, 73 got the peak, and then the decline, peak, decline, leading up into that peak out of the mid-cycle. Here we are, 60s, 80s, early 2000. Here's the early 2000 leading into the peak. The early 80s leading into the peak. 60s, there's the 60-year cycle low leading into that peak there. So nonetheless, we've got the mid-cycle leading into the peak, mid-cycle leading into the peak, mid-cycle leading into the peak. And you can see there's 20, 40, 60 years back. What happened to the US dollar at that time leading into the peak? Well, at that time, you had the US dollar dropping. So it fell all the way into the peak. We got the peak here. Remember, we saw that 73, October 73. Market collapsing into those peaks. Now, this is a much bigger collapse from the stock market top to the lower top. That was the lower high in 1973, but nonetheless, red background, macro view, US dollar collapsing into the peak of the cycle. Going forward, we can see again, 85 here is the peak for the US dollar. And yes, we saw the low in around the early 80s, ran up, but then the peak happened when the US dollar is collapsing at that point. Moving forward again, the peaks, that was around the peak of the dot-com bubble. It hung around for approximately 15 months, collapsed into the peak of the end of the cycle. Major collapse into the peak of the end of the cycle. Moving forward again, should this be the peak, which is what we've been covering here for some time, warning, timeframes due to expire. We're looking at timeframes here, at least on the monthly and the weekly. And we had extreme headlines in September. Europe and Great Britain are going to collapse. I've covered this quite a lot on the channel. If this is a local top, maybe we hang around here for up to about 14 months like we have seen in the past or on the previous cycle, the 20 years ago, or we just simply collapse out of this high like what happened 40 years ago. You've got 60 odd years ago back into the 60s there, and then we had a little bit of rounding over and then a collapse. Okay, so if this is the peak, we do have a potential topping process happening, or we can just basically drop out. Either way, the market, the US dollar, tends to, which is what is shown in history for the last 50 years. I mean, there's a 100% hit rate here. But what has happened is the US dollar starts to collapse from that point, leading into the peak of the 18-year cycle. And this comes out of the mid-cycle. All right. So this is some pretty high-level macro views that we're watching here. And we go into a lot more detail with this with our members over on Discord. And we've got Black Friday coming up next week. So if you do want to understand a little more or sharpen up your investing and your trading, what we do is try to clear up the noise in the news and the charts and just give you a simple plan and a process. I would highly suggest going over to the Investor Accelerator here, the free investor newsletter, dropping your details down because we'll have some Black Friday promos coming out next week. So go ahead and do that. Links are in the top of the video description. Plenty of reviews over there as well from you guys across Twitter, YouTube, our members as well from emails. So if you want to get in front with your trading and investing leading into the new year and take advantage of the Black Friday specials, go and put your email address down right now, top of the video description, free investor newsletter. We've got some good specials coming out next week for the massive Black Friday deals. All right, so back to what we are looking at here. Should we see the US dollar confirm, which we'll look at next, if we see this happen, we're probably likely going to see the next stage of the cycle run out into a new peak before we get a very big collapse. And then after this second stage of the cycle, this run up, this collapse is the severe one. This is stuff we can go really, really bad in the world. Like what we saw in the GFC, we had a pretty tough time coming out of the 80s, especially for land. And you can keep going back throughout history every 20 odd years. And then you get the bigger cycles around that 80 to 90 years, which is where we had World War II. Now, I'm not going to go into any more pessimistic stuff about that. We still have a few more years of good times ahead, which is why I'm so passionate about helping people get their finances in order, because this might be one of the last times we get for quite some time before we start to see the cycle refresh, clear out the mess, go through some really, really difficult times, and then head up into the next bull market. And that could be several years away. Let's change tune here a little bit. Check out Bitcoin and cryptocurrencies. The fear and greed index is still holding up at around 20, even though that we have hit new low prices on a lot of cryptocurrencies. The major lows here were around May and June. This is for the fear and greed index where people were most fearful. So there's still a divergence going on here where people are less fearful than they were 4 or 5 months ago. But the prices are lower. So there's a clear divergence going on there. As for Bitcoin, we're sitting around 16.8, coming up to 16.9 today as the market continues to climb. And we're hopefully getting a strong close to the end of the week. Nothing is confirmed yet, but should we close above 17.6, which was the June low, that's going to start to set us up in a much better position to say that this was a major shakeout in the market, which is what I believe we're seeing in the S&P. For Bitcoin, this is potentially a major shakeout. Our Wyckoff pattern for accumulation remains. Should we get that close above and the market continue to consolidate within the trading range, so that is what has to happen. And moving forward from that point, then that just sort of sets us up for the next couple of quarters of further accumulation. Now for cryptos, this is everything excluding Bitcoin and ETH. The market's still hanging on by a thread, trying to close above 320 billion. So we get there again, if we are to get there, then this would start to form a little bit of a base for cryptos, but that doesn't mean that the majority of cryptos can't fall further. So I'm still seeing further downside, more of a capitulation for the majority of cryptocurrencies. Remember, you've always got to split these up between some of the stronger stuff and the majority, the rest of the other 20,000 coins out there, because we've only done about 73% down from the highs. This is, in fact, including stable coins. If we minus the stable coins, which are approximately 150 billion off the 320, that brings us out to about 170 billion, which sets us up approximately down to this level here, the previous highs of the bear market of 2018, and then the peaks before the market took off in 2020. But let's do a measured move down to the top of the level before the market broke out. So at around 230 billion, take the 150 off. That's going to give us about an $80 billion market cap for all other cryptocurrencies. Now we know that this can happen. We hit around an 80% drop. Last time we were at a 92% drop, but of course stablecoins were a lot smaller of a market cap as well. So just getting into this particular zone, that would then set us up for a nice washout of all of the shit coins, and we can start afresh building another base, which what we've seen in the past has taken a couple of years. with a couple, meaning 2, before we start to get a real breakout. There will be some false signals here like we saw with the December through to June run up. So that approximate 6 months of a mini bull market. And that is going to catch a lot of people out, probably buying the tops again. Market fades out, reassesses, and then moves on for that next stage. Like I said, when we finally find a bottom, it could be a couple of years until we actually get a solid breakout. December 2018, here is the December 20 level, so that's the 2 years, and then the market breaks out to that really fast bull market where you make very, very fast gains. It might not be the biggest gains, but you don't have to wait very long for it. It just depends how patient you are. So far, everything is still pointing towards this low coming in for the stock market. Bitcoin little behind now, and crypto is probably going to take that much longer. Again, definitely need to go through an accumulation stage. Land holding up very, very well considering all going on out there in the market. Stay tuned. If you've been waiting for the Black Friday specials, wait no longer. Just make sure you got your email address subscribed to our free newsletter. Link is right here, along with the nearly $40,000 of sign-up bonuses on Bybit and BitGet. You will have to deposit cash, crypto onto the exchange, and of course trade. They're not just going to give you 30 grand or 9 grand for nothing. And of course, don't keep more than what you're willing to lose or than what you need to trade with. I thought that was quite clear, but from yesterday's video, people are thinking that I'm telling you to leave your money on there. Of course not. That's why I have the ledger link down here as well. Keep your money safe. You do need to keep money on exchange to trade. And of course, we all are here trading crypto, which is why we're watching this content. If you're not here trading crypto, maybe you're just here for the community and the fun times in the bear market. Remember, heads or tails in the comments section. I will read out the lucky winner in the next video. Thanks again, guys. Till next time, peace out.